Good morning, everyone. My name is Brad Matheny. I haven't done a video for, let me get rid of this and hide that, close that. Sorry, I wasn't quite prepared for this. I haven't done a video on uh, TradingView in months, probably. What I'm going to do today is I'm going to show you a simple setup for trading. Okay. It's very easy to, in my opinion, it's very easy to make a determination if we want to trade something or not simply by looking at where price is in relative to price channels and past or previous support and resistance. So let's start off with Google here. Okay, we're on a daily chart. We're going to be looking back. Go back a bit. Where are we? We've been higher. Okay, great. That's nice to know. Where are we in the trend? We're obviously in an uptrend, right, guys? Okay, so now we're going to come back into here. We're going to look for trend channels, and we're going to start on the opposite side of trends. So we're bullish. We're going to be looking at lows. We're going to pick either the body, the open or close area, or the low. In this case, I'll just start with the open and close, come right across the open and close area here. Okay, works out perfectly. Let me change this to blue. The reason it works out purposely or perfectly is because we get this rejection here, we get this rejection here, and then we get a little bit of rejection here. Now, in theory, ladies and gentlemen, I could probably move this slightly higher up into this area because we have rejection gap, rejection gap, rejection up, rejection up. So this gives us rejection areas, and this gives us a low area. Remember, support and resistance is kind of like a fuzzy line or water. You know, can get above or below the water level slightly, and then we need to see this rejection. So now the second thing you want to do is clone this and drag it to the upside. Now, what I like to do on the upside is I like to look for intermediate rejection. So we had the rejection here, a little bit of rejection here. Then we had a bit of a, let's call this an exuberance rally. So this will give me an idea where normalized price levels are, and then this will give me an idea where exuberance rejection is. So I'm going to make this maybe like a pinkish color. So now this gives me an idea of where we're at within a trend. Now we've just come off of these lows, and I want you to understand that when we're in an uptrend, okay, coming into and buying off of these rejection areas are actually very good areas to trade. But as we're looking at where we're at in the price trend and where we're at with trending, we're in an uptrend. We've come down off of these lows. We have an upside potential here of maybe 8%. I'll make this green. And if we look at recent lows, which are right in this area right here, and we come in and say, okay, recent lows right below our trend channel, so somewhere right in here is a good area for a stop. And if we look at where we're at right now and set up our stop, we have roughly a 3.15% stop with a potential upside range of 7 to potentially 11%. So obviously now if we're expecting downward activity, now remember the market is a whole bunch of stocks, different dynamics, different fundamentals, different earnings. Some are going to do well, some are not going to do well. So when you're looking at things, I want you to understand the broad scope of how price moves. Price moves in up, down type scenarios, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Comes back down. This is a moderate correction right here. This is basically a downward correction. Still sets up a higher low compared to this area. Then we have higher high, double low, double bottom, higher high, higher low, higher high, higher low, higher high, higher low. So we've got a really good chance here on Google for maybe an 8 to, what was this, 11.5% rally with only about a 3% risk, as long as it stays above this support level right here, this blue line. I'll make this kind of orangey. This is basically our support. We cannot get below this. If we do, the buy trigger is negated. Now, these higher highs, higher lows are very important. I did a video on Fibonacci price theory, and in essence, when we get above this level, this gives us a buy trigger. We stay in a buy trigger through this area until we get to this bar here, which gets us into a temporary short trigger. It moves downward, sets up a unique high here, sets up a couple of unique highs here, never gets above this level, eventually does get above this high right here, and we go long again right here. So this is a new long right here. This was our little short right here, kind of a sideways move, but we are currently long. We're in an uptrend. This gives us a very good indication here. We've got a low risk trade. Now, what you could do as this trade moves up is use a Fibonacci level. What you would want to do is look for the last major support area, which is going to be either here or down in this area. And you'd want to pick the support level and come back up. And I'll zoom in a little bit here. And what you want to do in this area, folks, is you want to use the 382 and the 50 area. Looks like I've drawn that backwards, but that's fine. As we move up, you want to use the 382 and the 50 area as a support level, potentially for your stop. Now, we would not be using this right now because we're so new in our entry. But once we get into some substantial profit, hypothetically, let's say price moves up to here, what do we do? Okay, what do we do? What we do is we expand the Fibonacci price retracement up to this price level, and then we would immediately know that our stop level should be somewhere in this area, the 382 to 50 area. Okay, as price continues to accelerate, you can expand this. So hypothetically, if price were to accelerate to the upside, hypothetically moving all the way up into this area, at this point, once you get substantial profits, then what you can do is you can eliminate the lower target down here. And what you can do is you can come in, move your stop up to the more immediate support level right here. And then again, you're still looking at the 382 to 50 level. So we move up to the high and we set up our 382 to 50 area. Our stop level would be somewhere in this area. Okay. This is a very simple mechanism. It works on Fibonacci, price theory. It works on trending. It uses price channels. You can use any other confirmation indicator you like, but remember, your buy zones, your area to potentially buy, are going to be in this area. Now, you want to try to buy in this downward trend. So you're looking for the opportunity to get into a trade. Clone, where's clone? There we go. You're looking to get into a trade in these downward near the lower support channel. That's where the best opportunities are for low risk, high profit zone. You're looking really for these types of areas. Now, it's opposite, obviously, for a downtrend. But again, I want you to realize how easy this is to set up and to operate. Okay, so let's pick another symbol. Okay, I have my TT scanner, which is a automated algo. It sets up a number of scanners. The reason I picked Google is here is a new long last week and a new long on a daily. So let's come take a look at INTC or maybe Adobe or Amazon. Well, let's pick something DWAC. Okay, DWAC. Let's go pick DWAC, figure out what's going on. So DWAC. Now, some of these are going to look spotty. Okay, this is a good example of not really having a trend. So look here, we're sideways. This is more speculative. You could probably run a line like this, indicating that we have some sort of an uptrend, and we are potentially going to have some sort of a zone out in this area. So this gives us an idea of where we're at. We may have a target up in this area at new highs, 18%. We would see that our current support level for our potential trade is going to be down in this area. So we have a very low risk trade, maybe a little bit lower. I would drag this maybe a little bit lower down near this low here. And so this gives us an idea that DWAC has a 3.86%, 3.68% potential downward trend, and has a 18.7% upward trend. Not the best example, folks. So this is something where, and again, I could go even further. We have the new high here, come back down, sets up a new low, breaks below the new low, still hasn't cleared this new high, sets up a base, comes back up, almost breaks this high here, but hasn't. We're in sideways trending. And that's why you have to look at this a little bit differently. Sideways trending. So what you're looking at here is this is the primary range for price. Okay. And what this does is this establishes a recent new price high, new price low. It's actually going back a little further back over here. So this is the new price high, new price low. And what this means is that this is price trying to establish a range. Okay. We have a new price high, new price low down here. This technically becomes our most recent new low, or this technically becomes our most recent new high. So in theory, we could move this up here, but still gives us a very broad range. Each of these represent what's called a unique price high or unique price low. In this case, these are highs. So we would look at this and say this is immediate resistance and this is secondary resistance. Whoops. Right here. Secondarily, we have immediate support way down here. We do have support here. So I would say you've got intermediate support right here. And green. And primary support way down here. Which means that we have upside in reality, moderate upside of 13, moderate downside of 4, still reasonable, but this level becomes our immediate exit all, stay, get flat, because we are in this uptrend. We've established this new high, which is resistance. We're in an upward channel. We want to see rejection at this level. So what we're looking for here is rejection at this level, rallying back up, possibly getting a bit higher. If we do not get the rejection at this level, then we are looking at a failed trade. Okay, let's come back over to the TT scanner list. Okay, here's a short AMC. Well, AMC's been pretty flat. Okay, UPS. Good, UPS. Come back over here. Something's got a little more volume. UPS is setting up a short. Well, looks like we had some other analysis out here from a while back. Obviously, this is another trigger that's set up. Big gap downward. We have yet to fill that gap. Very, very close up here. But this open gap, I'll draw it in a rectangle, continues to be a crisis for UPS. Okay. In other words, this open gap, as it will continue, will likely present real downside move. Now, you can obviously see that we're in a downtrend. So I'm going to pick this peak here, come right across these highs, set this up in blue, clone it, drag it right down here to these lows, try to find a lower support area. Okay, I am going to hold at this level here, this rejection area, because we come down here, we get rejected. We come down here, get rejected. So there's our price channel. Okay. Now, if you look at where we're at in the channel, we're down here near this lower area. We want to be trying to buy, or in this case, sell somewhere up in this upper channel area, in this area, or potentially up in this area. We don't want to be selling down here unless we're targeting very short targets. Maybe good for, a 5-day option, maybe perfect for something a little short term, get in and out at 2 or 3%. But let's see where our targets are. Now, looking back, do we have any downside targets? Yeah, we do. So let's go ahead and draw a horizontal line here. And then we will draw a horizontal line here. So we have to break through this resistance in order to get down to our support, in order to get down to this lower channel. And we've got only about 1.8, 1.2% downward channel. This is not a good trade setting up the way it is. We might see it break downward. It might continue to move another 4, 5, 6%, but you've got a 2.34% risk factor theoretically for a 1.92% profit target. I wouldn't take this trade. Let's go take a look at one more as quickly as we can. Let's get into this. ES is short, brand new short trigger. FDX is a long trigger 8 weeks ago. This is the Reddit list, by the way. Let me come back over here. And this is the hot list. USFD, MD, INTC, anything new over here? These are the number of weeks in the trade. So we've got one here in Cisco, 2 weeks old. Let's come take a look at Cisco real quick. Okay. Obviously, I've been doing some drawing in here. This is because we've had multiple triggers in Cisco. Let's take a look. This was our last trigger for a long, but let's go ahead and take a look. And so here's our chart. You can clearly see that I'm going to leave the trigger line here. You can clearly see that we're in an uptrend. So I'm going to look at this. This is a very clear rejection. So here's a low. It comes across this low. I need to move it up a little higher, up to these levels. So really, I marked this bar, if you want to see how I did it. I marked it off of this low. And then I looked at this area as rejection. I looked at this area as rejection. And then I looked at tagging here and tagging here as essentially confirmation of the trend. So now if I come back over here, clone it, move it up to the upper channel. Now I'm looking for inner channels, potentially maybe in this area. You can see how it's tagged here, rallied, stalled, rallied, stalled, rallied through it, stalled, rallied, stalled over here, rallied, stalled, rallied up, stalled, rallied through it, stalled. So now Cisco looks like it's in a bit of a downtrend. Okay, now we'll see how this goes. And again, because it's up near this upper channel, we don't really want to be looking at this until we get some sort of real strong confirmation. So this is telling us that, okay, Cisco looks good. It's in a longer term uptrend. It could rally a bit further, but it's in a moderate pullback right now. We would probably want to try to target something along the lines of an entry below, if it gets there, below this level, simply because that's the most recent support level. And again, when you start looking at higher highs and higher lows using Fibonacci price theory, you can see that I'm going to highlight them. This is a standout low right here that operates as support. This is a standout low right here. This operates as support. Move this one up. Set that up as green. Set this one up as green. And again, I'm running out. So this one we wouldn't want to trade, okay? We want to wait for it to come all the way down. I'll do a secondary video, and as you can hear, I got a phone call coming in. Hopefully these help, okay?